Buckle up, tech enthusiasts, because Spotify is making waves yet again in the stock market. Yep, the music streaming giant is doing some serious head bobbing and fist pumping as it vastly outperforms its peers in the business services sector and even within its own niche of technology services. Let's break down why Spotify is getting all this buzz today. First off, Spotify has been strumming all the right chords with investors this year. With an astounding year-to-date gain of about 64.9%, Spotify's stock is riding high compared to the business services sector's average return of just 6.7%. That's like comparing a rock star to a one-hit wonder, my friends. And this isn't just a flash in the pan. Wall Street analysts have been showering Spotify with love. The Zacks consensus estimate for Spotify's full-year earnings has gone up by a whopping 39.5% over the past 3 months, earning the company a Zacks Rank of number 1. But wait, there's more. Even when we look closer at the technology services industry, things continue to look stellar for Spotify. The sector itself, which includes 173 stocks, has had an average gain of around 20.7% this year. Spotify not only sits comfortably in this group, but far outshines the crowd. Oh, and don't overlook Paymentus Holdings, another player in the business services game, which saw an 8.2% return this year. Although not as sky-high as Spotify, it's still noteworthy, particularly when you consider its Zacks Rank number 2 status. Yet the real MVP here is undeniably Spotify, dominating both its industry and sector. Now, why is Spotify such a hit with investors lately? Well, for one, the company has shown phenomenal earnings and revenue growth. For the current quarter, Spotify is expected to post earnings of $1.12 per share, a delightful 166.3% increase from the same period last year. Talk about hitting the high notes. The Zacks consensus estimate for its current fiscal year's earnings stands at $4.95 per share, marking an impressive 267.8% year-over-year growth. And if that wasn't enough to serenade investors, the forecast for the next fiscal year indicates another solid leap with an estimated $7.18 per share in earnings. Revenue-wise, Spotify's recent performance is music to our ears. The company reported $3.95 billion in the last quarter, a 21% year-over-year increase, surpassing analyst expectations. This kind of revenue growth showcases Spotify's ability to attract and retain users while capitalizing on rising subscription fees and ad revenues. Of course, it's always good to keep an eye on valuations, and according to Zacks' Value Style Score, Spotify might be a bit pricey, graded at a D. Yet, its robust fundamental performance and increasing earnings estimates suggest it could still outperform the broader market in the near term. So, whether you're already grooving with Spotify or considering hopping on board, today's news makes one thing crystal clear. Spotify is playing a chart-topping tune in the stock market this year. Stay tuned, because this could be just the beginning of an epic encore. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.